You are watching Market Watch, the brief overview of the key events from the world of finance. It is important to note that in this format we do not talk about forecasts, but only analyze the current situation in the financial markets. Our main goal is to emphasize and draw attention to really significant moments. On Tuesday, during the American trading session, most Western media actively discussed the differences between the two voting members of the Fed's Open Market Committee. One of them stated the expediency of further rate increases, while the second confirmed the expectations of most investors about the need to monitor inflation, which is declining. It would seem nothing unusual. Why so much attention? The fact is that from the middle of July until the beginning of November, most institutional investors preferred the US currency. It's not so much about buying the US dollar, but about investing in assets that are denominated in the US currency. For example, stocks and especially government bonds, including short-term bonds, which are money market instruments. This is a very popular tool for large companies that have free cash. So since the beginning of November, we have seen a clear outflow of capital from the US currency to Asia and Europe. After all, the decline in the yield of US government bonds increases the demand for undervalued currencies, in particular the Japanese yen, euro, and pound sterling. I will also pay attention to gold, which continues to benefit from the prospect of easing the monetary policy of the Federal Reserve, which in turn is reflected in a decrease in the yield of US government bonds. On Tuesday, gold rose slightly above the $2,040 mark. But to confirm the willingness of buyers to continue growing, it is necessary to fix the price above $2,050. Please note that the price has already risen above this level 3 times, but never once have buyers managed to complete the week above it. Therefore, all investors' attention will be focused on the previously noted resistance levels and the upcoming report on changes in GDP growth rates in the United States. Recall that this is the final estimate, so there is not a high probability of a strong change in this indicator. And by tradition, we are completing the review by the cryptocurrency market, which also received an additional push-up, reacting to events related to the prospect of completing the current cycle of interest rate increases by the Federal. But at the same time, the decision of the U.S. Securities and Exchange Commission remains a more significant event for the market. The excitement is growing here, as companies continue to speculate, throwing in additional information about plans and possible mechanisms for launching a Bitcoin ETF. Please note that we are talking about plans, because there is still a risk of rejection or at least long-term postponements of the Commission's decision. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.